first half of 2025 has been absolutely incredible. For my investing, the Other Economics portfolio is up over 30% so far this year. This performance comes from using the value ratio, my custom indicators that reveals when a company is fundamentally cheap or expensive. In this video, I'm revealing one stock my system shows is incredibly cheap, and to prove how much I believe in it, I put my money where my mouth is. I just bought 750 shares for over $20,000. It's a completely unknown ticker you probably never heard. It's a microcap with a multibagger potential that is currently trading at half its fair value. My name is Adri, I share my investing ideas and my portfolio for free. I'm not here to sell you anything, I'm just very happy that you're watching. Please, if you find this content valuable, share it with a friend, hit the like button. Like always, this is not financial advice, it's just entertainment. Before I reveal the company, let me quickly explain my system, the value ratio. My indicator is built on 4 variables: price, potential earnings, growth, and risk. Think of it like a PE ratio. The lowest the number, the cheaper the company. For example, in my portfolio I own Google, currently at a value ratio of 14, Abercrombie, value ratio of 16, Booking.com at 18. These are cheap quality companies. Why they're cheap? Because the median value ratio of the 150 companies on my watch list is around 24. Apple, for instance, is at 24 right now. Then you have companies with a high value ratio that I believe are expensive. Robinhood, I talked it in my last video, is currently at around 40 value ratio. Palantir, you can't even place it on the scale, so high it is. My strategy is simple. I buy stocks when their value ratio is well below the median, and I sell them when they're over it. This year, for example, I bought Elf Beauty at $65 when its value ratio was around 15. 2 months later, I sold it at $117 with a value ratio of 27. That was a $10,000 gain in just 2 months. You don't believe it, you can watch the video I posted when I bought it. I believe the small company I'm about to reveal has similar potential. The current value ratio is around 14, as undervalued as Google according to my system. Now, I don't expect this to double in a couple of months. Of course, I hope so, but it's very, very unlikely. The sentiment will not change quickly because it's a company without media attention. It's a microcap no one is talking about, but it's really, really, really cheap. I'm talking about Sanara, Medtech, ticker SMTI. Sanara operates in the healthcare sectors, focused on wound care. Their products are all designed for things like soft tissue repair or bone fusion. Their best-selling product is Celerate RX, a powder used for surgical wound repair that is reportedly working very well as it's gaining in popularity. Their second bestseller is BioSurge, a disinfectant that eliminates 99.99999% of bacteria in 60 seconds. I'm not a doctor, I can't evaluate their products, the quality of their products firsthand, I have no idea, but their numbers are telling a very interesting story. First, revenue growth has been incredible, proves that their products are being well received by the market, by the doctors. Last year alone, they grew revenue by 34%. I'm always conservative with my investment, I don't want to lose money, so I'm using a 20% CAGR for my value ratio calculation. Of course, I hope they do more, but I like to be careful. They have a very solid gross margin, around 85 to 90%. However, Sanara is still struggling achieving positive operating margins, but as you can see, the trend is heading in the right direction. A company with 85% gross margins should be able to hit and to achieve 20, 22 or even more operating margins. Again, to be conservative, I've only assuming 14% margins in my model, in my calculations. I believe as soon as they become profitable, the market will reevaluate Sanara. Valuation should expand, hopefully double from the current level. Of course, there are risks. Sanara has 20 million in debt with no positive free cash flow. There has been share dilution for acquisition and stock-based compensation, and it's a tiny company in a very competitive sector. But there are also risk mitigators. For example, the CEO, Ron Nixon, owns almost 40% of Sanara, so he has serious skin in the game and wants to see the company succeed. Another positive is that they're also launching Tissue Health Plus, a telehealth platform to evaluate and heal complex wounds remotely. The platform aims to reduce total cost of care by 25% plus, while improving healing rates to 85% plus and reducing hospitalizations. If it finds adoptions, this could speed up growth even more. Overall, I gave a risk score of 40 out of 100. For me, it's a medium risk company, especially considering my conservative growth and margins assumptions. If we check Sanara chart, the stock has been consolidating since 2020. In the same time, the revenue has quintuplicato. Quintupled, like 5 times more. We are currently near a key resistance level of $26. Like always, full transparency, I bought 750 shares at $28. I'm already down a bit. A quick warning. If you decide to buy Sanara, please be sure to use limit orders. The company is a microcap, is not liquid. Without a limit order, you risk overpaying. If the company goes back to all-time high, and it should, as long as the fundamentals are improving quarter by quarter, it should go back to all-time high. If it goes there, you could already double your money. If they keep growing 20-30% a year, I believe we will inevitably see a breakout to the upside with big potential returns. So, I recommend you to research SMTI and let me know if you decide to buy or if you discover any red flag I'm not aware. On a different note, I'm sorry, it's been a while since my last video. I injured my meniscus and I had to have surgery. This is probably the reason why I started thinking more about healthcare investment, and this is also probably why I bought another healthcare-related company yesterday. I will share it in my next video, so be sure to follow. I would be happy if you write me a comment and send me some good vibes for my recovery. Thank you. Thank you very much for watching Adri Economics. See you next week. Peace out.